Could a slowdown in share buybacks be a hurdle for the stock market? Well, according to the Wall Street Journal, share repurchases by companies recently contracted for the first time in 7 quarters, potentially removing a pillar of support from the market. Mike Bailey is Director of Research at FBB Capital Partners, and he joins us now to discuss exactly what this could mean for investors. Mike, welcome. Nice to have you here.
Great. Thanks to be back.
Are you worried about this, and why the pullback?
We're not too worried about it. So we would sort of put the buyback changes in perspective with some other changes that are going on in the market. So if you look over the last couple of years, you've seen buybacks move up and down. We really haven't seen a tight sort of pattern with a big move up or down in buybacks and, frankly, a move in the stocks, which is really what investors worry about. You could go back to, for example, 2017. We saw kind of a steady amount of buybacks and stocks went straight up. The flip side was 2018. So you saw companies buying back their shares, right, and the stock market was dead. So we sort of put a little cold water there in terms of thinking there's a really tight impact.
But if there's not a direct correlation in the stock market movement, you have to admit, though, that has been a pretty good tailwind for the markets over the last decade, hasn't it?
Absolutely. So it certainly has helped. I mean, some folks have tried to quantify it. I think some people said if earnings are generally growing high single digit, let's call it 8% earnings growth, maybe 1 to 2 percentage points have come from buybacks. So it's definitely helping. It's not the majority of growth, but it is meaningful. So any big swing in buybacks, you want to pay attention to it, but you got to keep in mind all the other factors out there that are driving total earnings growth.
Could it also be, though, that when interest rates were low and we were coming out of the recession, companies were able to do those buybacks perhaps a little more cheaply and a little more easily than they are now?
It's possible. I mean, you could argue, if interest rates are low, people can, borrow money in the debt markets, take that and buy back stock. That certainly could help out your stock price. Maybe there's a little bit of less of that now, although the flip side is, interest rates are coming back down again. Mm-hmm. So you could see that cycle start to kick in. And, maybe the first quarter of the year was a bit of a dip. Things could stabilize or start to come back in the back half of the year.
So what do you think happens now? Do we see a meaningful pullback of some kind at some point? I realize that you're making the case that the buybacks haven't been as much of a tailwind as others might expect. But if they start to pull back in a meaningful way, what do you think happens to the stock market?
It depends on the size. So if there's a real meaningful pullback, if you start to see headlines, big blue chip companies really cutting their buyback programs, and that starts to filter down across the market, you could argue that's going to have an impact on sentiment. It's going to slow down overall earnings growth, and that will have an impact. I guess the question is, how do you want to quantify that? So if earnings are generally growing, let's say 8%, and now they're growing 7 or 6. That's not as good. It's not as attractive, but it's still, better, potentially better total return than you could get in the bond market. So it's all relative, but we're really watching for any major changes in buybacks.
All right, Mike Bailey with FBB Capital Partners. Mike, thanks so much.
Great, thank you.